Hey guys, John Paulamy here, Actionable Intelligence. Today is Saturday, September 21st, and this is the weekly market update. The disclaimer, anything that you hear or see on this podcast or video is not to be taken as investment advice. I'm not a financial advisor. I cannot give you personalized financial advice. This is for informational purposes only. Please do your own due diligence. It's your money, it's your responsibility. Okay. So the big news for the previous week was, of course, the Federal Reserve cutting rates for the first time in several years by 0.5%. I think quite a few market participants were expecting that. Some were expecting 0.25. There's been a lot of commentary about this. There's a lot of questioning asked, like, why are we even cutting rates with the stock market at all-time highs and all of these other issues? Supposedly employment's doing not that bad and the economy's not doing that bad. So, I mean, I've said this before. I think that it's very simple, the explanation. The fiscal situation in the United States is out of control. The people in Congress are not willing to get spending under control, either party. The interest payments with the rates being so high are starting to become a problem, over $1 trillion a year. And so the Fed is, working with Treasury, I think, to lower rates. And I think what's going to happen eventually is down the road, we may have another bout of inflation. Inflation is always and everywhere a monetary phenomenon. Okay. And so why do they cut rates typically? Well, they cut rates typically because the economy is weakening or heading into recession, and they do that to help stimulate the economy, right? Lowering borrowing costs, stimulate more borrowing, and then the knock-on effects from that. Or if there's a financial crisis, and I would suggest to you that the U.S. is inching closer and closer to a financial crisis with its fiscal situation, house not being in order. And so now we're getting into this emerging market, third world mentality of, well, we'll just keep spending money that we don't have and we'll just print it out of thin air. That's what they do in banana republics. And you get the follow-on inflation and economic deprivation and all the other things that go along with this. But, this is what we've degraded to. The United States and the West in general is not a virtuous place anymore. It's just a bunch of people. Well, that's a whole another deal. Do I agree with cutting rates? Do I look at the policy and say, yeah, this is a good? I don't care. All we care about is Money Fest 2024. We now have, as I've said before, for the last year, we were working ourselves, the world, that being, and the central banks in the world, to a coordinated, not that they got together in a room, but they are coordinated now with the majority of central banks around the world cutting rates, reliquefying the system. That should be a tailwind for tangible assets. Now we have pretty much all of the G7 countries, or the major central banks, cutting rates, with the exception of Japan, which is raising rates. And this is why the yen is strengthening, why you're having trouble, as the yen strengthens, why you're having carry trade issues. But that's another subject. So this is why, gold is making new highs this week. This is why Bitcoin has turned around. These are liquidity situations. These are front running this. Okay. And so the bazooka, the big bazooka, was fired this week in the United States. And so now we're going to continue to see rate cuts. And again, we'll see what happens with the economy. We got what we wanted here. And so tangible assets, this is a major tailwind for them. And we continue to track central bank activity. And every month, a lot of banks are cutting rates. More central banks are cutting rates than raising rates. Okay. So this is from Reuters. The U.S. Central Bank on Wednesday kicked off an anticipated series of interest rate cuts with a larger than usual half percentage point reduction that Federal Reserve Chair Jerome Powell said was meant to show policymakers' commitment to sustaining a low unemployment rate now that inflation has eased. Quote, We made a good, strong start, and I'm very pleased that we did, unquote, Powell said at the press conference after the Fed, noting its increased confidence that the country's bout with high inflation was over. It reduced its benchmark policy rate by 50 basis points to the 4.75 to 5% range. Quote, the logic of this, both from an economic standpoint and from a risk management standpoint, was clear. In addition to approving the half percentage point cut on Wednesday, Fed policymakers projected the benchmark interest rate would fall by another half of a percentage point by the end of this year, a full percentage point next year, and a half a percentage point in 2026, though they caution that the outlook that far into the future is necessarily uncertain, of course. So anyways, we now have cut rates. We've gone a rate cutting cycle. Gold's making new highs. Stock market is doing well in the short term. We'll see what happens there. And risk assets are going to do it. I mean, Bitcoin now is like, I think last time I looked, 63,000. It had faltered recently, but it's, it's a liquidity. It reacts to increased liquidity. And so we're going to see this now, right? So we'll see what happens. But I think the portfolio is positioned well to take advantage of this. And I've been nibbling at some, I think silver now, I think traded to over $30 an ounce. I haven't really looked at things too hard, but silver will always lag until the end of the precious metal uh, bull market, and then it will outperform near the end is what typically happens. But regardless, it's time now to start looking at, I've already had some positions in some mining companies and a royalty company in the portfolio, major companies, large companies. I'll be moving down the food chain now to some emerging producers. That's what we want to see, because, as the gold price is at $2,600 now, we want to look at, what people's costs are, and if they're going to be in a situation where they're going to be able to increase production into a rising gold price. Now, part of the problem is we have to watch the other prices of commodities too. It's kind of good right now, at least for the third quarter earnings, I think, that the gold price has been elevated, but yet energy prices have been down. One of the major costs at a mining operation is, in fact, the diesel fuel costs. So we'll see how this translates, but I'm expecting very strong cash flows. And I think that, we're going to see some FOMO start to happen. I'll talk about that later on in the presentation. But I think that people are starting to wake up now to what's happening with precious metals. And I think that we've been ahead of the curve on that. And we were waiting for this big bazooka to be fired. Like I said, I don't endorse these policies. It's not good to be in debt. It's not good to be central planning interest rates, but this is the world we live in. And so we have to look at, okay, if they do X, what happens to various asset classes? That's the whole purpose of looking at this. So again, we're in this Money Fest 2024, and it's going to continue now. And so I think that, gold's broken out of if you want to look at technical analysis, some people that are, like to draw crayons on charts, have shown a very big setup, a multi-year setup of a cup and handle type setup that has broken out. This has been in the past a very, very bullish type phenomenon, extremely bullish. So I don't like to give price targets. That's kind of a mug's game. I see a lot of podcasters. I see people out there giving price forecasts. I learned my lesson. That's kind of a mug's game. It's hard enough to get the direction right. If we can get the direction right and understand that we're kind of in a bull market now, I think that the rest of it takes care of itself. You start getting into, the price will be this much by the end of the year or by the summer of next year, and then it doesn't come to fruition, it becomes difficult. So I think that we're in a bull market for precious metals and real assets, tangible assets, for many reasons that I've explained in the past. And I think now with the underinvestment tailwind we've had, the bifurcation of the geopolitical situation in the world as a tailwind, and now the monetary loosening that's going on around the world as a final tailwind, I think we're really set up for a multi-year move higher in tangible assets. So I would prepare accordingly. So just this is from Bank of America showing the financial manager survey that financial managers allocation to commodities is at a 7-year low. This is bullish in my mind. This is contrarian. If financial managers had their customers in commodities, that would be something that would be telling. Right now, this is contrarian, right? Because we're saying most people are not involved in this. We've seen how the gold prices advanced, for example. It's up almost like 25% on the year, and gold stocks are still lagging tremendously. So people are not the people are really still fascinated with technology and AI and all these things. And I think that as this rolls over, which I anticipate it to do, and disappoint people, then I think that you'll see especially if we continue to see higher prices for these commodities. I mean, in addition to gold going up, copper's been relatively strong the last couple of weeks. And even oil looks like it may have put in a recent bottom. So I think we could see a massive rotation is what I'm saying. And we have seen it before where, you know, financial managers have put their customers into commodities, but right now they're kind of, this is positive, I think. It's more runway for us. So I wanted to talk about this. This is big news. I'm not convinced of this whole AI thing. I think artificial intelligence will make an impact, but I don't think when I look at the power consumption that's needed and how it can be monetized, I don't see that. But that was the same thing I saw during the internet. I was skeptical during the internet, but people eventually found ways to make it useful, and costs came down over time. So one of the things, though, that is an issue is the amount of power, electrical power that's required, energy to power these chips and this AI and this learning model. I don't fully understand it, but what I don't want to get sucked into is linear headline, fascination, which we get into sometimes. Remember, like EV, they show these linear extrapolations of EV growth, and it's going to require this much electricity and this much copper. We don't want to get sucked into that. We want to look at things and say, okay, well, what's the trend and is it legitimate? Because I think EVs have kind of disappointed, right? We didn't really hit the targets. As a matter of fact, it's failing now to really do what people said would happen several years ago. It doesn't mean they're going to go away. Doesn't mean that it's totally, busted, but it's not the massive growth that everybody thought. And I'm concerned that this AI situation is the same thing. We're going to throw all this money now at these energy sources, which I think, regardless, if they build out these things, these plans, then an AI doesn't end up panning out and using as much energy as people thought, you're still going to be net positive because nuclear, as you well know, I'm a big advocate of. So anyways, what I saw here is Constellation Energy is setting up a deal with Microsoft. There's a power purchase agreement. They're going to bring one of the shuttered units of 3 Mile Island. If you remember back in the 70s, I think 3 Mile Island site actually has 3 reactors there. Of course, the one that had the meltdown, they just shut it down and dealt with it. But other reactors operated, and they recently shut the last reactor down, I think a few years ago when it was under Exelon. Because why? Because the nuclear reactors could not compete with the subsidized renewables, and also because of low gas prices, gas generation. But now, this is now reversing because the demand for power is so great now because of this data center build out that we basically need all of this baseload power. So regardless, this is like a 20-year power purchase agreement that they may restart. This is like the second thing we've seen like this. We have another reactor, I think, up in Michigan that's being restarted. Another company's restarting, and this is one positive that I see that is bipartisan, that a lot of people in government want to see for various reasons, whether what side of the aisle you're on. But regardless, I think what I'm trying to get the point across is that this nuclear power renaissance is really powerful. It has turned, and it's barring some major accident like a Chernobyl or a 3 Mile Island, I think that we've got the major tailwind. So this is major. This is a big deal. It's a big contract. I mean, it's a PPA. I don't know the terms of it. I don't know. It's not going to, I don't think this thing comes online. They're not going to get it turned back on, I think, till 2028. But again, it's the direction we're concerned with. And we just keep seeing these positive news items. And when you have companies like Microsoft and Bill Gates get involved, you're talking about the possibility of billions and billions of dollars, right? Here's another example from CNBC just this week on September 17th. $100 billion for new data centers. Microsoft, BlackRock formed group to raise $100 billion to invest in AI data centers and power. So there you go. Again, this is a lot of money. This is just these two. And so I think you're going to see more of this. I think you're going to see public-private partnerships. I think you're going, remember what Jennifer Granholm said when she was at the Vodal christening or commissioning, whatever, giving a speech that, we need to build 99 more of these Vodal type 1,000 megawatt type reactors. So I think we're on our way, and I think it's positive long term for our country. I think that, again, as I've advocated before, something on that scale would be analogous to the effects that the building out the interstate highway system or the railway system back in the 1800s had for the overall benefit of the United States. And that's what government should be doing, not all this other nonsense. It should be looking out for the welfare of its people. And so what's the, not advancing these political agendas, but that's a whole nother subject. Okay. But at least, we're seeing this from our perspective. This is positive because obviously there's not enough uranium being produced. And the more and more demand that's out there for nuclear power, at some point, the billions of dollars are going to have to come in to the uranium mining sector to get it going. I mean, if you go back and look at, it's still on its back, U.S. production. At one time in the late 70s, early 80s, I believe, if I remember the data correctly, the United States was producing somewhere around 40 million pounds of uranium a year at the peak. And I think we produced under 1 million the last couple of years each year, well under 1 million. One year, virtually none. Now it's coming back. We're bringing brownfield projects back. We've talked about that. But this is a long, drawn-out process that's going to require a lot of capital and time. And that's where I'm really kind of focusing a lot of my attention. Who's doing that? Are they competent and capable? And, what's that mean? I'm getting off, I still find it amusing. People need to really stop focusing on these crappy juniors. Focus on companies that can increase production, that have into a rising price environment. That's where you're at now in the sector. People are pining their hopes on these, holes in the ground with a liar standing next to it, or lifestyle companies. Not a good idea. Time to focus on, okay, who has legitimate mining business and who has the ability to actually do this. And it's difficult, as we saw. I think UR Energy announced this week. Paladin was bringing Langer Heinrich on, and they had to reduce and lengthen out the time frame to get to nameplate capacity because it's hard to do this. And the same thing with UR Energy. They were saying the same thing. They had originally projected a certain amount of production for this year, and they had to reduce it because what did they say in their press release? They can't find qualified people. And so they have to train them in-house, and it just takes a lot more time and effort and money. So this is going to be a limiting factor on this huge, trying to get uranium for all of these projects. And so this is bullish. If you, just buy, if you got SPUT trading, I think a week or two ago was trading at almost like a 15% discount. Yeah, that's not the 10 bagger or the 100 bagger. Or I read about a guy that, we're here to compound wealth over time. And so we don't have to go to the time to just buy all those junky companies when they were like long-term leaps. That's over with. Now you got to focus on businesses and what they're doing, who's running them, and do they have the ability to increase production and do it and increase cash flow. That's what you kind of have to look at now. So this is another thing that I'm looking at. I was looking at natural gas fired power plants are easy to build. They're quick to build. I also saw GE Power Verona, I think it's called, when they split GE in half, the power division. They're increasing the amount of heavy gas turbines I believe they can build from 55 to 70 a year. And so you see why, because the fastest way to do this is just build some gas turbine cogeneration plants and get those up and running. And you can see right now, it says U.S. on pace to plan more gas-powered capacity this year. Plant announcements already spiked between 2022 and 2023. And you see that if the pace continues in 2024 that we've seen, we're going to see this increase over time. So does that mean run out and buy GE Power Verona, GE Verona, whatever it's called now? I mean, the stock's really moved already, but I'm just pointing you that there's opportunity out there, right? And this is kind of fulfilling it. But I think long-term nuclear power ends up being the final destination. So this is interesting. I find this humorous. I had an interesting interchanges that I have with people, and they follow me, they subscribe, and we all have biases. We all have ways of looking at the world. We all have, you know, I'm not sure everybody thinks through how they think and have a philosophical anchor and have thought through things, but I think a lot of people just react. And you'll remember that for many years, as I've been an advocate for nuclear power, I said that the situation in Germany would eventually deteriorate to the point economically where these goofy morons that are in power are going to be thrown out. And, rational people will come back and they will turn the energy Vende being a failure. And that was easy to project, having been in the business and understanding you're not going to run an industrial economy on intermittent power sources. Simply not going to happen. Germany being one of the worst places on earth for renewable energy, but they're going to do it anyways. And shutting the reactors down over Fukushima like Merkel did, panicking, goofy women in charge. Not a good plan. And then people coming at me all the time. I've had a lot of German people come at me. Some, have emailed me and said, yeah, it's kind of like what you said. And a lot of people say, you don't know what you're talking about. But here we go. You're having elections now in another state in Germany today as we speak, Brandenburg, which is a very, very strong state in Germany for the SPD, which is Olaf Scholz party. But he's neck and neck right now, the exit polls. We don't know the poll results yet, but he's neck and neck right now with the AfD, which is this supposed right-wing party. But it doesn't really matter. You see what's happening in Germany. I obviously did not foresee the Ukraine war and the subsequent sanctions and the destruction of the Nord Stream pipeline. But this is just hastened what I've already said. So what you have here is you have Friedrich Merz, who is with the CDU. He's probably going to be the next chancellor of Germany. And what is he saying? He's being interviewed by Bild, which is a publication there in Germany. And what's he say? Then tell us very specifically, what 3 things would the CDU and government do differently first? And so what's he say? Number 1, we would lower the tax burden on energy. They have an energy crisis in Germany. They basically allowed the United States and the UK to, or maybe they didn't even know. I mean, Schultz is such a cuck, he might not even have been included in the conversation. They blew up the Nord Stream pipeline, and you saw what that's done to Germany now. Yeah, I've said this before. The even during the formation of NATO, the discussion of the Atlanticist in the UK and the United States was always been to keep the United States in Europe, keep Russia out of Europe, and keep Germany down. Okay. And Germany, Germany filled with competent German people is a very, very formidable force. And if you couple Germany full of German people, okay, with Russia's vast, basically ending natural resources and an Asian market, that they would have access to through the Eurasian land bridge and all the, Belt and Road initiatives of China, I mean, this would be unstoppable. And so that's not, and then, that's not what the US wants to see. Okay. And so they've been actively sabotaging this for decades. And so this is what you have. Now you have, Volkswagen talking about shutting down production there, layoffs in the tens of thousands, possibly layoffs of all these major companies. I think I was listening to this other upstart leftist party around this gal, Sarah, I can't remember her last name. It's got this long last name. I've listened to her. She makes a lot of sense. She's a populist too. And, she's not talking goofy progressive policy. She's talking about, hey, coming out of that whole East German socialist communist type situation, not actually advocating for that, but being more center left, but focusing on Germany. That's the purpose of the German government, to help Germany and look out for Germans' interests. But that's been, subverted by the globalists and the hegemon of the UK. And why does anybody care what the UK thinks? The UK is this little chihuahua running around. It's like the Baltic states. Who cares what Lithuania thinks? The sun has set on the British Empire, but yet they're still actively, part of this Anglo-Atlanticist hegemon. But that's another conversation. So anyways, when Friedrich Merz eventually becomes this chancellor, what's the CDU going to do? Well, one, we would lower the tax burden on energy, i.e. the electricity tax, network charges, and all other government levies. Yay! Number two, we would immediately reconnect the decommissioned nuclear power plants to the grid. This is going to be your next chancellor in Germany, more than likely. Scholz is not going to survive for various reasons. The economy's in the toilet. I mean, he's a cuck. He's a wet noodle. He's a doorknob. You got these other Habeck, Baerbock. These are all amateurs. Okay, they're on their way out. The stoplight coalition is over. The CDU is going to be in power. Now, will they get all this through? If this in fact happens, then, again, I don't want to take a victory lap yet. When they turn the reactors back on, I'll take my victory lap, but we're heading in that direction. Why? Because energy is everything. And that's what people are starting to find out. Take the lesson, rest of the world, of what happens. And I hope, Germany gets their head screwed on right. In Germany for Germans. And I don't mean German-speaking Turks and Africans and Middle Eastern people. They will not be able to do what you got to deal with this immigration problem. I hate to say it, but you have to. Okay? We need Germany for Germans. We need France for French. That's what we need to see. And we need to go back where these countries take back power from the EU and the globalists that have been subverting these native-born people for decades post-World War II. And so so they have many issues that they need to deal with, but the first thing they need to do is get the economy straightened out. And in the end, everybody votes with their pocketbook. That's what ends up happening. So we'll see. We'll see what happens. But I think that be interested to see what the voting looks like in Brandenburg today. As the results come back, the last two states that came back, SPD didn't do very well, but this is a stronghold for the SPD, as I understand it. So we'll see what happens. But I've been talking about this it's just inevitable. It was inevitable that Japan would turn their reactors on. Unless you want to go back to, like I said, living like a hobbit, and most people don't want to do that. Okay? They'll just forget. They'll conveniently forget their environmental bona fides and their socialism. Hey, I like to be warm in the winter, cool in the summer, and have a job. That's what it comes down to. If those hierarchy and needs aren't met, the rest of the stuff doesn't matter. And that's, what's starting to happen. So more positive uranium news. This is, I think, it's interesting what's going on in Kazakhstan and Kazatomprom. This has been talked about. I put up here just to be equipped. It's always shipping and handling, right? So it says Kazakhstan considers uranium exports to Western countries via Azerbaijan too costly. Kazakhstan may redirect its uranium from the European market since transportation has become much more expensive due to sanctions against Russia. So, look, the world's bifurcating. If you continue to allow yourself to be pulled down, Europe and other countries around into this morass that the United States and the Atlanticists want to pull you into, then you're going to suffer because you don't have any resources. The BRICS countries are aligning. We're getting this bifurcation. This is another example. And there's plenty of demand for Kazakh uranium in the global south and east as China and India and the rest of these countries expand their nuclear. We don't need Europe and the US. I keep saying that. And some people get mad. That hurts their feelings. Why do you say that? Because, most people don't think about themselves as just, their own thing. Most people are jingoistic and nationalistic to the point where they say, my country's the best because I live here. And so that's fine. You can be a nationalist, but you can't invest your money that way. It doesn't work. You can't invest your money on politics. Okay. You have to look at the world for the way it is, not the way you want it to be. Believe me, if I was king for a day, the world would not be the way it is. But I'm not, and I'm never going to be. And so my obligation is to get returns on my wealth and compound it for my family and my friends and people that I have to take care of. I got to earn. Okay. People got to eat. And if I'm investing based on politics or ideology, that's not necessarily going to result in the returns that I need. That's just reality. I can have whatever political beliefs, theological beliefs, whatever, but I have to invest for the way things are. And the world's bifurcating. The West is in terminal decline mostly because of its morals and value systems, its lack of virtues. That's another. And the global East and South no longer wants to be dominated by this post-World War II neoliberal world order that's dominated by the West. They consider to be people in the West and the East and South consider to be exploitive of them. And they don't need to because they're of sufficient economic strength now that they don't need them. No one needs Europe. No one needs the US going forward. This is the century of Asia, the global South and East, whether you like it or not. I've said it before. The place to be in 1800 was London. The place to be in 1900 was New York. The place to be in 2000 going forward for this century is the East, whether it's Shanghai, Beijing, Singapore, what have you. You get the point. That's where things are happening. That's where the opportunity is. But, people can wrap themselves, Team America, wrap yourself in a flag. It doesn't mean that the United States is going to dry up and disappear. There's still going to be opportunity here. But we have a lot of issues here, and they're not being solved. And that's allowing us to fall further and further behind. So we have to invest accordingly. This is, is the United States going to ramp their uranium production back up to 20 or 40 million pounds a year? I don't know. If this uranium doesn't go to the West, where's it going? I mean, eventually now everybody had to finally leave Niger. That was quietly announced. The U.S. finally left. The Dawson mine's going to get built. Where's that uranium going to go? Is it going to go to France? Is it going to go to the U.S.? Or is it going to go to China? Is it going to go to India? Is it going to go to Russia that are all building out their programs? Is it going to go to these other countries, UAE, Egypt, Turkey, all these places that are trying to build reactors now in the global South and East? We'll see. So BHP, big global miner, warns AI growth will worsen copper shortfall. World's largest miner expects global demand for red metal will rise more than 70% by 2050. Again, we have to be cognizant of and curious about and a little bit of trepidation about linear headline reading. Oh, BHP said global demand for copper will go up by 70% by 2050 because of AI. Well, I've already learned my lesson on a couple of these things now, right? I should have remembered my lessons from the internet build out and electric vehicles. You can't just do linear extrapolations based on some think tank or what have you. Okay. I believe that over time, because people want to get wealthy and to get to certain standards of living, you need so many kilograms of copper per capita, that copper growth will continue. Usage will continue. Can it be exacerbated for periods of time as we build out the electrical grid to support all these data centers? But are we actually going to do it? Because the more and more I'm reading is like, if they can't make this AI actually profitable, what's the point of building it all out? And so again, it's outside my circle of competence. So I just want to look at what's electricity demand. I want to stay focused on, as these countries industrialize, as these countries get wealthier, I know that certain amount of energy inputs are required for certain GDP levels. And that means certain amounts of iron ore, certain amounts of copper, certain amounts of what have you, BTUs into the economy. That's what I want to focus on. How you get there, whether it's AI, EVs, air conditioners, steel making, I don't want to necessarily focus on that. Yes, it's interesting to understand what's happening, what's driving demand for electricity and power, but we have to be careful of this headline creep, because it can jump up and bite us and assume that all these things are going to happen. We don't know the future 100%. We can't know. So we just have to look at it. And then as new information comes in or conflicting information, we have to be able to not be biased such that we've wedded ourselves to an idea and can't change. Because the inability to change, to stay wedded to an idea that's now a wrong idea, can cost money. So I just thought this was interesting. I follow this guy these people on Twitter or X. It's just oil and gas machinery sales are down. Will this lead to production being down? Just the data doesn't go back that far on these charts, but it is interesting that as mining oil and gas shipments year over year percentage changes for equipment go down, that you see oil and natural gas production go down. So if we're heading for a glut, we're already seeing machinery sales and equipment sales for oil and gas go down. What does that mean? So I just think it's interesting, something to track. I've been thinking more and more about energy, and I'm not 100% brought over to the idea that all these hydrocarbon molecules are as fungible. Yes, they technically are. I mean, I've listened to Doomberg and some other folks talk about this. For example, he was talking with Adam Taggart about what's happening in China with the amount of heavy trucks that have now converted over to natural gas or CNG, and it's lowered diesel demand by 200,000 barrels a day. Yes, I agree that that has happened. But is that happening in the US? I mean, I've been seeing this experimentation. There was a company called Westport that used to make devices to convert diesel engines to natural gas fire. There just wasn't the infrastructure of the filling stations. It's just really easy. Remember, there's a lot of sunk cost, okay? And when you have tens of thousands of gas stations and truck stops with diesel, and it's still relatively cheap, people are going to use it. Technically, the argument that a guy like Doomberg makes, that the hydrocarbon molecules are, they're interchangeable just depending on how you process them, and you can make diesel fuel out of natural gas. You can make natural gas engines. You can turn coal into oil and gas. I mean, that's what the South Africans were doing and Germans were doing during World War II. South Africans have a company called Sasol that's been doing that. They had to do it during apartheid. So it's possible to do these things, but the amount of investment, and do I see anybody doing it? So we'll have to watch it. I think the argument has some validity to the point where we have to watch what China's doing, what India's doing. But yet, oil usage or demand is, I think, projected to go like 104 million barrels this year. So it's still going up. We have billions of people that want a higher standard of living, that want transportation. And not all the fuels are going to, people are going to use what's easiest. Okay. I mean, for example, they just finally turned this huge refinery on in Nigeria. Nigeria being, I think it's still an OPEC member, but it produces something like a little bit over 2 million barrels of oil a day, but yet was importing all of its refined products until the wealthiest man there finally, they built this I think it was a 10 or $20 billion refinery. So they finally turned it on. So these things, I think, technically are correct to say, but what's really happening in trend wise? Do we see the billions of dollars of investment going into putting all these natural gas or LNG or whatever stations in the US? I haven't seen it. It's basically been a bust. It was kind of a fad. It kind of went away. We'll have to see what happens. But getting back to oil demand, I'm still cautiously optimistic on, oil demand going forward, just because if you've traveled around the world, you see how desperately poor the majority of people are. And as they get wealthier and as they get, their demand for energy is going to be relentless. And so they're going to grab and use whatever is the cheapest and easiest to use. And fortunately, oil and natural gas are easy to use. We have large deposits of them. We know we have many have over 100 years of experience processing them, transporting them, using them. So I don't see them being displaced very rapidly. But the argument that he does make and other people make, which I do agree with, is that human ingenuity is infinite. And so when problems arise or shortages arise or resources become depleted in one area, the amount of human ingenuity and experience that we've had over history will usually lead to a solution. And I do agree with that. And people will be drawn. The other argument he makes is about a global arbitrage around different hydrocarbons. I'm sympathetic to that argument also. So we'll have to see what happens. But I don't think oil demand's going away anytime soon. So gold's making a new high. This is from the World Gold Council. It's gold ETF flows. And you see, this is what happens, right? We have a bull market. Gold's up like 25% this year. And so what's happening? In North America and Europe, we're seeing flows now into the gold ETFs. Okay, it's it's moving. The momentum Momo monkeys are coming. It's getting more press. That flywheel starting to spin and spin faster and faster. So this is, you see literally quarter after quarter of just flows out of gold ETFs from Europeans and North Americans. And now you're starting to see it. Now, is this a one-off, couple quarters or months? I don't know. But I think if the gold price, I think as I've said earlier, we're in a gold bull market. I think we have quite a few tailwinds behind us. I think this is going to continue. I thought this was interesting. This was off Twitter. Jesse Felder had it on his feed. It says relationship between U.S. public debt to GDP and inflation-adjusted gold prices has strengthened since the 2008 subprime financial crisis. So basically, as U.S. public debt goes up as a percentage of GDP, the gold price has tracked it fairly well. Again, this could be, just a correlation that's random, but I think if you look deeper, you'll understand why it's like this. Why? Because as the debt increases and they don't have enough tax revenue to pay for it, they have been increasing the debt. They have been monetizing the debt. And I think this has had a positive effect on gold prices. Not only that, as you lower rates now, okay, what have you done? We had a period of many years from 2000, we had lower rates, this period of lower rates that I think is ending, but real rates is what you have to look at. What's the rate of inflation relative to the 10-year? And as real rates fall, as the rate of interest falls closer to the rate of inflation or goes below it, you get into what's called negative rates. And again, you can look at a chart on a site called Long-Term Charts, I believe it's called. They have a chart of the gold price with the juxtaposed with the real interest rates being 10-year and minus the inflation rate. So if you don't necessarily need to have negative rates. You just need to see the rates, real interest rates going down, and that usually is positive. And so we're in a rate cutting cycle. I believe we're in a rate cutting cycle because the Fed's trying to help the Treasury because there's no fiscal discipline. I mean, what they should do is raise rates, okay? But they cannot. We have so much debt in the system now. We cannot we cannot, the economy wouldn't be able to absorb the pain of a deflationary unwind, and it would be politically not palatable. And so this is one of the things I think that because the economy is, people say, well, don't talk about politics. You have to, because politics now has inserted itself so far into the economic life. It has such an effect now. If you want to sit here and say that the Fed's independent, and you're a fool. It's fully politicized. Monetary policy is there to do one thing. It's not there for inflation or stimulate employment. I know that's what the legislation says. The point of the Federal Reserve. The Federal Reserve is to make sure that the Treasury stays liquid, and they can get rid of that, sell that debt, and do it. Because if you lock up the Treasury's debt issuance, it's all over for the U.S. So that's not going to be allowed to happen. And so whatever little games have to be played, whatever amount of money that has to be printed, and however they try to snow you or con you into believing because they have inflation under control and they, angling for a soft landing that never happens, by the way. This is all nonsense to distract you from, the game that they have been playing for many, many decades. So anyways, as this correlation seems to be working, I expect debt as a percentage of GDP to continue to increase. Therefore, I expect this to continue, higher gold prices. So gold outperforms Bitcoin since Bitcoin's recent high. I would note that, I don't have anything against Bitcoin. Actually, I think it's going to do well going forward, but it's really probably the most correlated to liquidity. So as liquidity is going to be increased now in the system, we should see Bitcoin perform, right? So it's really driven by liquidity. That's why I think you've seen Bitcoin react recently, and I guess that's 63, 64,000, whatever it is now. But, recently had dropped. You see here from the start of the year, back in March at least, when they had a recent high of Bitcoin, it was off almost greater than 20%. But now it's rallying because in anticipation of increased liquidity. That's what I would say. So people, this is why you have to own tangible assets, folks. This is world debt in trillions. It's at a record high. It's not going down. And the governments are going to do what they have to do. They're going to print currency units and take on more debt. Think about it, folks. In the West, just the amount of pension obligations and healthcare obligations for all these old people. I mean, this is what a lot of this is this demography plus all these wars, just plus, years and years of low inflation and low interest rates. And so people took on a lot of debt because it's easy to service when rates are like at 1 or 2% or at zero. Like we had a decade of almost 0% interest rates. Remember, we were having those discussions several years ago about the record amount of debt that was negative, had a negative interest rate, real rate. Okay, remember that discussion? Well, that's going to change, and this is going to be a problem now, because all this debt was taken on during a time period when rates were when interest rates were extraordinarily lower than they had been for generations, and so I can take on more debt, and my interest payments will be lower. Well, now that that's going to reverse, we're going to have a period probably of higher rates over time. Although I suspect that at least in the West, they're going to do everything. They're going to get into the yield curve control, but that's another discussion. But this is going to be a problem. This ends in one thing. It ends in more currency units, debasement of currency, which is ongoing and will continue. This is why I'm an advocate for precious metals and other tangible assets. And again, M2 now. Remember we talked about how M2 was declining. Now it's reversing, right? And so money supply is increasing year over year. What's inflation? Inflation is always and everywhere a monetary phenomenon. So if money supply is increasing, you can expect. And so, we're not going to get into the whole discussion of how the United States Federal Reserve or other central banks conduct monetary policy, but how they do it basically, goes back to what I wrote in an article in the Actionable Intelligence Alert newsletter back in February, I believe it was, on the Cantillon effect and what happens when money's created. And so, real quick, how does the Fed lower rates? Well, the New York Fed has a trading desk, and they go out into the market and they buy bonds, they buy securities, okay? And we know that as you buy these bonds, the price of the bond can go up, will go up if you buy sufficient amounts, and that will lower the rate. That's how they do it. Well, where do they get the money to buy the bonds? Well, they create it out of thin air. So you see how this works? And now that's when the Cantillon effect, because if you're a pension fund or a private investor like myself, it's time now to get out of T-bills and go into tangible assets. Okay. And so if I sell my T-bills, or if a pension fund starts selling its bonds or lets its bonds roll off because rates are going to come down, or they sell them to the New York Fed trading desk and they get currency units, US dollars, well, what are you supposed to do with them as rates are coming down? Put them in CDs, put them back into T-bills? You're not going to do that. And so you're going to say, okay, well, if rates are coming down, I'm going to look at other investments that could outperform. If I can get only 4%, 4.5% on a T-bill, and it's going to go down over time and through the end of the year, I'm going to be rolling it into a lower yield. Hey, I'm going to put it into gold, or I'm going to put it into this REIT, or I'm going to put it into this foreign stock that's yielding 6%, or what have you. That's what the Cantillon effect is. But you can't predict where that capital goes to. And that's why when people say, well, John, for many years we didn't have any inflation. You had inflation in assets. This is how the game's played. You've got to be a player. As Charlie Munger said, I'm going to quote him. I think the number's higher now, but he said it. He gave the advice. You've got to get that first 100K to be in the game. He said, and I'm using his terms now, okay, quote, that first 100K is a bitch, but you got to do it. Whatever you got to do. If you got to eat bologna sandwiches, if you got to get a part-time job, well, it's even that price of entrance is probably higher now, $250,000, but you got to be in this game or you're going to continue to fall behind. You have to be an asset owner going forward. It won't even be a matter of becoming wealthy. It'll be a matter of survival, because they're going to continue to debase. I've talked to people that I really feel bad for them, working people. I've talked to some, I wouldn't say I'm friends with, but I talk with, and they're lamenting about, and they don't have a clue what's going on. Prices are higher. Why is this happening? I don't understand. What do you think will happen? And I don't even try to give them advice, because they're not going to follow. They're living hand to mouth. They don't even know why this is happening, what's happening. They just can sense something's not right and that they're falling behind. Do not be this person. You've got to get a bankroll together. You've got to be in this game. You have to understand how this system works. I'm not saying it's a good system. I'm not saying it's going to last, but this is the music. The music is playing. You have to be on the dance floor. That's it. As Chuck Prince said, former CEO of Citibank, I believe. All right, guys, that's it for this week. Appreciate the readership. A lot of stuff starting to happen now. I think this was a really big inflection point over this last week. We've basically got all the central banks, major central banks, cutting rates in a rate cutting cycle. Well, with the exception of the Bank of Japan. And we do have a deflationary situation in China, but I suspect they're going to, they're going to have to eventually do what they need to do there. We have a lot of the developing countries, smaller countries around the world cutting rates and have been. We have this Money Fest 2024. This is going to be very positive, I think, very positive for hard assets. Watch the global PMIs. We'll see if they turn. They had slightly dipped. Global PMI manufacturing had kind of dipped a little bit, but I'm noticing some different countries now are starting to see their manufacturing and services PMI starting to climb again. We'll see, especially in Europe. Europe's really having if you look at some of the stats, are really not good, but we'll see what happens. I think politics is starting to shift there. And rate cuts are positive. They do re-liquefy the system, and they do stimulate. So we'll see what happens. But we know what happens. We've showed before what happens when monetary policy gets loose. Usually stimulates, global PMIs increase. That's usually positive for resources. So I think we're in the right place at the right time, and we're holding the right assets. All right, guys, that's it for this week. We'll talk to you next week. Thank you.